That day in San Jose, California, a single line of announcement echoed down the quiet halls of a research facility, and it changed the tone of an entire industry. The name was QuantumScape. With just one phrase, solid state battery, the global electric vehicle market stopped to listen. Lithium metal, ceramic separator, solid electrolyte. These weren't just words, they were the vocabulary of a new energy era. The implication was clear: someone was preparing to end the lithium ion age. QuantumScape's journey began in 2010 within the laboratories of Stanford University. Its founders, Jagdeep Singh, Tim Holm, and Fritz Prinz, were driven by one conviction: that the limitations of lithium-ion batteries could be engineered out of existence. Traditional lithium-ion cells rely on liquid electrolytes, which are flammable and prone to short-circuiting under high power. QuantumScape's answer was radical: replace the liquid with a solid-state ceramic separator and use lithium metal as the anode. In theory, this would create a battery that charged faster, lasted longer, and eliminated the risk of fire. In practice, however, that theory was entering one of the most complex engineering battles in modern energy science. By 2018, QuantumScape had captured the attention of one of the biggest automakers in the world, Volkswagen. In the automotive world, risk diversification is the rule. Most companies maintain multiple battery partnerships to hedge technology and supply risks. But Volkswagen broke convention. It made a single concentrated bet on QuantumScape. This was a stunningly unorthodox move, and investors immediately began asking why. Was this a signal that QuantumScape had cracked the code on solid-state manufacturing? Or was it an act of desperation by Volkswagen, racing to catch up to Tesla and BYD in an EV arms race it was already losing? Either way, it marked a turning point. A small California startup had suddenly become a strategic lifeline for a century-old European giant. Then came 2020, the year QuantumScape went public through a SPAC merger on the New York Stock Exchange, MySE. This move defied convention again. Most deep tech firms go public only after achieving stable revenue or pilot-scale production. QuantumScape, however, was still in the R&D phase, with zero revenue and no commercial product in sight. Why would a company at such an early stage choose to expose itself to market scrutiny? Two explanations emerged. The optimistic one: confidence. They believed their technology was mature enough to justify market validation. The skeptical one: liquidity. They needed capital to sustain expensive scaling trials. Then, in December 2020, QuantumScape released its most dramatic dataset yet: a single-layer prototype cell that could charge to 80% in just 15 minutes, retain 80% capacity after over 800 cycles, and operate stably across a wide temperature range. The market reaction was immediate. The stock surged, at one point exceeding $100 per share, giving the company a market capitalization greater than that of many established automakers. But insiders and engineers saw something troubling. These results came from single-layer cells, which are laboratory scale. Commercial EV batteries require dozens of layers, each operating in perfect synchronization. Scaling from one layer to many introduces new failure modes: uneven current density, heat accumulation, mechanical stress, and dendrite propagation. That unspoken caveat became the first great mystery. Why reveal nearly perfect data, but not disclose how it scales? Was it because the data couldn't scale, or because they didn't yet know if it could? By late 2022, QuantumScape announced that it had shipped 24-layer A0 samples to automotive partners. Normally, in the automotive battery industry, validation follows a clear hierarchy: A sample for design testing, B sample for durability testing, and C sample for production validation. QuantumScape, however, introduced a new, unofficial term: A0. No one had ever heard of an A0 phase before. Was this a clever rebranding of an incomplete milestone, or a cautious attempt to avoid overpromising? Whatever it was, the ambiguity was telling. The company did not disclose yield, uniformity, or long-term performance of the multi-layer stack. This silence became the second mystery. What exactly did the A0 shipment represent? Proof of readiness, or a public relations buffer between promise and proof? Then, in March 2024, QuantumScape unveiled a new generation of prototype cells called Alpha 2 and began shipments to select partners. A few months later, in July 2024, it announced a sweeping shift in its business model. Volkswagen's subsidiary PowerCo would receive a non-exclusive license to use QuantumScape's technology. In most industries, exclusivity is the ultimate validation of proprietary power. But here, QuantumScape was opening its crown jewels to multiple partners. The company framed it as an efficiency play, faster scaling, less capital burden. Yet investors saw another layer of meaning. Perhaps the technology wasn't yet robust enough to lock down exclusivity. Or perhaps QuantumScape needed to signal progress to keep capital flowing. The timing, a pre-market announcement that sent shares soaring, raised eyebrows. It was a masterclass in momentum management, but also a reminder that expectation is not execution. By mid-2025, QuantumScape announced that its Cobra line, a ceramic separator manufacturing process, had entered baseline production. To engineers, baseline production is an ambiguous term. It usually refers to small-scale process verification, not mass production. Again, the key metrics, yield rate, defect density, cost per unit, were absent. If the company had achieved production-grade yield, those numbers would have been the highlight. Their omission hinted at something more complicated. Either the process remained unstable, or commercial viability was still out of reach. This formed the third mystery. Why announce a milestone without data to support it? Investors could only infer the answer from the company's tone, optimistic but opaque. Finally, in September 2025, at the IAA Mobility Show in Munich, a Ducati electric racing motorcycle fitted with a QuantumScape battery was unveiled. It was a stunning visual, sleek, futuristic, cinematic. Headlines declared that solid-state batteries had finally hit the road. But soon, details emerged. This was a tech demo, not a production-ready system. Under normal circumstances, automakers unveil such integrations after certification and stress testing. QuantumScape skipped that sequence. This wasn't a launch, it was a demonstration. Some interpreted it as bold confidence. Others saw it as a sign of pressure, a company fighting to maintain momentum amid growing skepticism. And so came the fourth mystery. Was this a triumph of innovation or a theater of survival? When we map this entire timeline, 2010 founding, 2018 Volkswagen Alliance, 2020 listing, 2022 A0 shipment, 2024 Alpha 2 prototypes and licensing shift, 2025 baseline production and Ducati showcase, we see a pattern of extraordinary ambition entangled with strategic ambiguity. Every milestone was both a breakthrough and a question mark. Every silence carried meaning. For investors, the equation is now clear. QuantumScape's fate hinges on four measurable outcomes. 1. Multi-layer yield. 2. Cycle life. 3. Separator cost efficiency. And 4. PowerCo's manufacturing ramp speed. When, and only when, all four align, QuantumScape's valuation will stand on solid ground. Until then, the company remains a paradox, a technological promise valued like a revolution, yet proven only in part. This is why QuantumScape continues to be not just a stock, but a mystery. The next quarterly filing, the next shareholder letter, or a single line in a technical appendix could redefine everything. When that happens, the market will finally answer the question that's lingered since the beginning. Was QuantumScape the spark of a new energy era, or simply the brightest illusion of one? Before we close, the Value Stir channel invites you to share your insights. If you know of any publicly listed, privately held, or soon-to-be listed stocks or crypto assets that deserve a deeper look, drop them in the comments below. Your tips often become the starting point for our next investigation. And to our loyal viewers, thank you for watching, subscribing, liking, commenting, and sharing our work. Your engagement fuels everything we do, and we'll continue striving to bring you sharper, deeper, and more insightful stories in return. This was Value Stir.